You don't have to be a veteran to buy a home with 0% down. If you live just outside the city, or you're willing to, there's a federal program designed for rural and small-town America that lets qualified buyers put zero down, the USDA Single-Family Housing Guaranteed Loan. If you've been told you need 20% down, or even 3 to 5% down, that down payment is the wall stopping you. Meanwhile, rent keeps rising, you're saving slower than prices move, and every rate change knocks your buying power down another notch. On top of it, many folks in suburbs that look rural don't realize their neighborhoods actually meet USDA's rural definition, or that their closing costs can sometimes be rolled into the loan if the appraisal supports it. So they keep renting, pay someone else's mortgage, and watch the window close. USDA's Guaranteed Loan Program gives approved lenders a 90% federal guarantee, allowing them to offer 100% financing to eligible buyers, aka no money down, on a 30-year fixed mortgage for a primary residence in an eligible area. Income limits increased for 2025. USDA officially raised SFH guaranteed income limits and published them June 18, 2025. That widens eligibility for many households who were just over last year's cutoffs. You can check your county's specific limit on USDA's site. Bigger elderly family deduction. For households with a borrower age 62 plus, the elderly family deduction, used to calculate adjusted annual income, increased from $400 to $525, which can help some seniors qualify under the new limits. Bottom line, more families now fit under USDA's income caps in 2025 than before. Where? Homes must be in a USDA-eligible rural area. Don't guess. Use USDA's official eligibility map to check addresses. Some suburbs that feel ex-urban still qualify. Final eligibility is confirmed by USDA on a full application. Who? Households must meet adjusted annual income limits, generally up to 115% of area median and calculated using household income, not just the borrower's. Adjusted income? Household gross income minus allowed deductions, dependents, childcare, certain medical elderly deductions, etc. What property? Primary residence. Site must be typical for the area and not primarily income producing. So, not a working farm or a property meant to earn income as its main purpose. Loan terms and fees, fixed 30-year only. No ARMs. There's a one-time upfront guarantee fee of 1% and an annual fee of 0.35%. Functions like monthly mortgage insurance. These are the standard FY25 levels lenders are using. Closing costs help. If the appraised value is higher than the price, eligible closing costs can be financed up to the appraised value. You can effectively come in with $0 if the appraisal gives you the room. Credit and DTI. USDA uses its automated system, GUS. There isn't a hard federal minimum credit score in the rule. Many lenders impose their own overlays. Standard ratio guideposts are AOI at 29% housing, 41% total debt, with waivers possible for strong files. Their situation: Ryan is a technician, Marianne is a teacher. Combined gross household income is close to their county's USDA limit. It varies by county. They have 2 kids and pay monthly childcare. They rent in the outer suburbs and are priced out of city neighborhoods. They find a 3-bed, 2-bath home just past the suburban edge, eligible on the USDA map, listed at $420,000. Step 1. Quick eligibility check. 5 minutes. We verify the address on the USDA eligibility site. Still eligible. We estimate adjusted annual income using USDA rules. Start with household gross, subtract allowed deductions, dependents, childcare, elderly deduction if applicable. Ryan and Marianne don't have it. If they were 62 plus, they'd now get $525. If adjusted income is at or below their county's limit, they pass the income test. County limits are posted by USDA and were updated June 18, 2025. Step 2. Pre-approval and ratios. Their lender runs JUS. If JUS returns an accept, no manual debt ratio waiver needed. If not, the lender may manually underwrite and lean on compensating factors. cash reserves, strong payment history, etc., to address DRS 29-41 ratio guideposts. There's no federal hard minimum credit score in USDA regs. Overlays vary by lender. Step 3. Offer strategy with 0% down. Ryan and Marianne write an offer at $420,000 with 0% down and ask the seller to cover a portion of closing costs or plan to roll costs in if the appraisal comes in higher than the price. USDA lets eligible costs be financed to the appraised value. The price itself can't exceed value, but the upfront 1% fee can always be financed. Step 4. Appraisal and loan structure math. Simple. Suppose the appraisal hits $424,000. They can finance their eligible closing costs up to that appraised value, plus the 1% upfront fee. Annual 0.35% is collected monthly as part of the payment, like MI. Lender locks a 30-year fixed. Step 5. Property rules check. The home is typical for the area, not income producing, no working farm activity, so it passes USDA site standards. Step 6. Clear to close. Ryan and Marianne bring $0 down. If the appraisal cushion covered closing costs, they may bring $0 total, or very little. If not, they can still ask for seller concessions. Many lenders follow a 6% cap guideline on interested party contributions. Their outcome: they become homeowners with no down payment, a predictable fixed payment, and they kept their savings for an emergency fund and small upgrades without needing VA eligibility. If this is helping, tap subscribe to Money House Media and share this with a friend who thinks 0% down is only for veterans. We post straight talk guides like this every week to save you money and stress. Area and map. Always confirm addresses on USDA's official eligibility website. Boundaries change over time. The tool reflects current designations. Final call made by USDA upon full application. Income math. 3 buckets. Annual household income. Everyone 18 plus in the home, even non-borrowers. Adjusted annual income. Subtract eligible deductions, dependents, childcare, elderly disabled, certain medical. This is the bucket USDA uses to test the county limit. Repayment income. Borrower's stable income used to qualify for the payment ARC ratios. 2025 limits and typical numbers. Limits vary by county and household size and were raised in 2025. Many lenders summarize an in most locations baseline, e.g. around $119,850 for 1-4 people, $158,250 for 5-8, but always verify your specific county on USDA's map. Credit approach. USDA's regulation doesn't set a universal minimum FICO. Instead, underwriting uses GUS plus lender judgment. Lender overlays may set their own minimums, commonly around 620-640. If GUS says accept, no ratio waiver needed. Otherwise, manual rules apply. Ratios. USDA's handbook uses 29% housing, 41% total as a reference. Waivers can be granted with strong compensating factors. Property. Must be modest, safe, and not primarily income producing. The site should be typical for the area. Fees. Expect 1.0% upfront, financeable, and 0.35% annual for FY25. USDA updates these when needed to keep the program subsidy neutral. Lenders use the current FY fee table. Closing costs. Seller credits allowed. Many investors cap at 6%, and eligible costs can be financed to appraised value, a unique USDA advantage versus many other loans. Already in a USDA loan? The USDA Streamlined Assist Refinance can reduce payments with limited documentation and often no appraisal. You generally need on-time payments and at least $50 MO savings to qualify. Income limits still apply. Great for dropping payments if rates improve. USDA is only for farms. False. It's for primary residences in eligible areas. Properties can't be primarily income producing. I need a big down payment. False. USDA is 0% down for eligible buyers. I live too close to the city. Maybe not. Check the map. Lots of outlying suburbs still qualify. USDA has PMI like FHA. Different mechanism. USDA uses a 1% upfront guarantee fee and 0.35% annual fee, paid monthly. I can't finance closing costs. You can, if the appraised value supports it. Eligible costs up to the appraised value plus the upfront fee. Map check. Run your target addresses through USDA's eligibility website. Income check. Pull your county's 2025 limit on USDA's site. Remember, limits went up in 2025, and list your eligible deductions to get adjusted annual income. Pre-approval. Have your lender run GUS. Discuss any lender overlays and your debt ratio picture, targeting 2941 unless GUS accepts you. Offer strategy. Consider 0% down with a plan for seller credits or financing eligible costs if appraisal allows. If you want a second set of eyes on your county limit or a quick map check, subscribe and drop your city plus household size in the comments. We'll point you to the right USDA page and help you frame the conversation with your lender. Educational only, not legal, tax, or financial advice. Loan approvals/terms depend on full underwriting, property eligibility, and current USDA rules. NMLS WR1020597. Don't wait to buy real estate. Buy real estate and wait. Subscribe to Money House Media and link the button below and get your free guide to home buying, title vesting, and the reverse mortgage roadmap and the USDA assistance.